All the excitement and hype surrounding the Tesla IPO has done little to attract one portfolio manager. That's David Abella. He oversees almost $3 billion at Rochdale Investment. He's been cautious on IPOs in general for some time. His fund, by the way, has outperformed 98% of its peers year to date. Dave, not impressed by Iron Man and Brad Pitt and George Clooney driving these cars?
Well, actually, I am impressed with the looks of the car to some degree. It's a great-looking car, and in a certain sense, I would root for them to be successful, because who doesn't want an electric car successful in this environment? But the company is it's losing so much money, and the prospects of really ever making money are so small that I just, as a fundamental value investor, I couldn't be interested in the stock.
Well, when you have something like the Department of Energy also investing in this, that doesn't build your confidence a little? Do you think that some of the other entrants to the market coming later in the year, like the Chevy Volt, for example, are going to fare better?
Well, I think when you get something like Tesla, you're making two bets. One, you're betting on the electric car market in general, which is still a tough bet at this point. I mean, we might all be driving them in 20 years, but that's not going to help Tesla. And then secondly, you're investing in Tesla as a story versus all the other auto companies that have done some research in electric cars and could roll out something pretty quickly. Well,
and you're also banking on a luxury car, not just an electric car, but a over $100,000 car.
That's right. Although the business plan is to shift it to a new model that is more of a $50,000, not a $100,000 car. But
only $50,000.
Only, right. And but I think that would be the buyer initially, is a luxury buyer who has an environmental image is very important as part of their overall purchase.
Now, I'm curious, when you look at IPOs and you're trying to figure out if you want to invest in them, what kind of criteria are you using, and are they different than investing in existing companies that are already public?
Well, that's a very good question. I think that our focus would be, if we can get a hot IPO and we think it's going to trade a lot better, well, certainly we'd want to get it for our investors. I would definitely use the same metrics I'd look at a regular stock. What's the valuation? Standard things like price to earnings, price to sales, price to book. A lot of IPOs are coming. I was mentioning Chipotle as being a classic example of something that everyone across the board thought would be underpriced. It jumped a lot that day. Almost impossible to get a good allocation because everyone wanted it. But on metrics compared to other restaurant companies, it was attractive, but it had a lot of growth behind it.
Now, speaking of food, just quickly, want to get in a couple of more staple side stocks that you're looking at. Kraft is one example. I believe you're looking at Target as well. Why are those two attractive to you right now?
Well, those stocks are both kind of the opposite of Tesla, right, in the sense. But I think that today's we had some decent news in the market. Market was up on balance, but we're in a little bit of a slower growth phase. Retail sales have turned over a little bit. Economy still growing, but at a slower pace. Unemployment still high. So those are both defensive stocks. Kraft's more defensive than Target, but Target could do better if the economy continues to steadily improve. So it's a defensive play. Steady cash. Kraft in particular has a nice dividend and a growing dividend, but Target is regaining some market share. So those are the types of names I'd rather be in at this time in the market.
So you're not concerned that you'll miss out if the economy does start to recover more quickly, that you'll miss out on some higher returns?
Well, if that were to happen, we don't have to hold Kraft and Target for the next 10 years. We could sell them and move into different names. But at this point, it seems like they're the prudent plays right now. And certainly higher growth names. If there's more evidence that the economy is doing a little better, I certainly would be interested there too.
Okay, David, thanks a lot for coming in. David Abella of Rochdale Investments talking to us about Tesla and also about some of his other picks.